Well, good morning, YouTube. Louie here, and welcome to the weekend. I'm glad we made it. And this morning, I'm going to start off with a beautiful pre-release of the Germania mints that they were so kind to give me for unboxing. That's right in front of you. We're going to talk about some other things I bought this weekend, the Awakening coin, where I found eagles for $35, 21 eagles for $35. Also the red flag, black flag series. I bought a lot of silver last week in spite of the dropping spot price. We'll talk about the markets and why they're going down and what will make them probably go back up. But let's get started right now with the beautiful chestnut leaf from Germania Mint. And here it is. Gosh, what a classy outfit they are. And they have entered the bullion market as well. Boy, a lot of reflection on that. So the Chestnut is their newest release in the, what is it? The Enchanted, Enchanted Forest? Let's see. No, it is the newest release and second coin in the Mythical Forest series. The first coin was the oak leaf, which is doing really well in the aftermarket, selling for 15 plus premium. So that was a very nice release. But you know what? I like the chestnut better. So each one of these comes encapsulated, comes with a COA. They are not out yet, so don't look for them, but they are coming out. The mintage is 25,000. Let's get a look at the bicephalous eagle here really quick. Mintage is 25,000. There we go. Beautiful, beautiful finish on that. 25,000 of the BU, and I believe 500 of the proof, which is not out yet either. The proof has a much higher price point, so the BU is my preference, but proceed as you wish. And let's see, does this come in gold as well? So yeah, look for these to come out in April. Beautiful coin, and the chestnut has a chestnut tree apparently has a history in Europe, planted by the Roman armies, and is said to symbolize both chastity and fertility, as well as power. Talismans were made out of it. Beautiful tree, beautiful wood. So I won't go on and on about all the history of the chestnut, but that is a beautiful second coin in that series. Very, very nice, and they are just continuing to roll out the hits. As you know, Allegories is extremely popular, and then their coins just get more exotic from there. But honestly, what I'm most excited about is the bullion. The kilo bars that I've been buying. I've picked up 2 so far, and really excited to bring those to you if they will ever ship. I really want to see that beautiful kilo bar, and I had a wonderful conversation with my contact over at Germania Mint about the future of Germania Mint's bullion products, and they have a lot in store for us. So there you go, 4.9 silver with a COA. I don't know that I don't think it comes in this beautiful black sleeve in the aftermarket, or at least not that I recall. So, but you would get the COA, and that beautiful round. I don't know what the price point would be. I'm guessing about $35. So keep an eye out for that. It's with premiums today. Who knows what anybody is charging for anything collectible, but pretty much anything that's collectible silver that moves is $35. In the aftermarket, physical demand is still quite strong. And Well, like I said, I've been buying. It has been disappointing to see spot drop, but in my opinion, what goes down will come back up. Lots of reasons for that, which I'll go through in a little bit. First, I want to talk about what I picked up this week. I was really super fortunate to be alerted by text message from AppMex that the next release in the Black Flag series, the pirate ship series from AppMex, the Red Flag Fleet, was releasing Monday morning. Scooped up a couple of tubes of those at a nice entry-level price, and I can't believe that they immediately doubled in price in the aftermarket. So that is the kind of thing I like to do. Provides additional funds for messing around with increasing the bullion stack. Also, I tweeted out the 5-ounce Awakening coin from SD Bullion. They are starting a new series that has kind of a Chris Dwayne silver bullet, silver shield feel to it. This is the 5, but in a 5-ounce format, and just bullion. And if you were lucky enough to get that for the price that I did, yes, it's more than generic bullion, but I think it has a tremendous collector value. So I tweeted that out as well. I think there were about 40 left. Some of you scooped those right up. Shout out to Mr. Vegeta. A lot of you new guys don't know him, but I'll put a link back to his channel. He does some great videos, unboxings, and is always interested in collector coins, as I am, because I am both a collector and a stacker and a flipper and a diverse metal investor and a paper investor, and I don't leave any stone unturned. So, if you like that eclectic style of stacking, come on along with me. Check out Mr. Vegeta. He's going to give you some good deals along the way, and good to see my old friend back on YouTube. The other thing I tweeted out was 21 Eagles. Oh boy, found them again for 35 bucks. Actually found them in the 34s. Now, I'm not talking about random date Eagles. I'm talking about the 21 Eagles. Bought a nice tube of 21 Eagles. I said I wouldn't do it at these high premiums, but with spot dropping, in my opinion, artificially. I mean, there's good reasons for spot to drop, but physical demand is through the roof, and spot can drop, but it only creates an opportunity if that brings down the price. So, a $10 premium on top of an artificially low $25 spot price. I was glad to get those 21 Eagles around 35, and many people paid 40 or more for them. I'm going to make a prediction here in the face of despair and what looks like the end of the world for precious metal stacking. Those 21 Eagles, they're going to push up to 50 bucks. That's my prediction. That's why I'm buying more of them. I didn't buy nearly enough under 30, but we added a tube here at 35. You might even find them for 34 today. Now, I bought mine at the coin shop in Canada. Yeah, crazy world, huh, where you have to go to Canada to get American Eagles, but there's no sales tax, and it's harder and harder to find retailers that will sell to California without sales tax. So that avoids an 8% premium for me. But there are still a couple, 3 retailers that won't charge the sales tax if you look closely for them. In the case of AppMex, they do charge the sales tax. So any order I make there has got to be $1,500, which is the limit for no sales tax. All right, so that's what I picked up this week, and I'm still shopping, and I'm still, keeping the faith. Moving on to the markets. Okay, the markets, I'm going to tell you what my opinion is. It's only an opinion, but it is so simple that look for the simple explanation about what's going on. And I didn't mind so much the spot price dropping on silver and gold. Although interesting, aren't we still around 65 GSR? very interesting that they smacked it as hard as they could, and the GSR at 65 or so stuck. Let's see, because wouldn't that be right? $25 silver, 1,700 gold. I think that's 65. Let's see, or is it 75? Hold on one second, I got to do that math. Well, that might be some more like 68, so pushing back into the high 60s. But silver has still got an incredible value compared to gold, and I have been buying a lot of gold recently because it's been on sale, including American Gold Eagles, which I'll unbox for you hopefully next week. They just, boy, you buy metals these days and they just never friggin' ship them. But yeah, I've been buying gold and paying premiums on the American Gold Eagles Type 1 2021. Been buying some generic Canadian maples. You know, I tweeted out also the gold Libertads. If you're following me on Twitter at Losing Louie, you will see that I found you guys a great opening price on gold 2020 Libertads. If you needed them, I didn't need any more. I already bought too many, I think. No proofs though. Boy, the proofs are just, if you were lucky enough to grab a proof gold Libertad, holy mackerel, just hold on to that thing because those are going to be so valuable. The BUs, you know, I think you could sell if you make a nice profit. But moving on to the market, okay, here's what I think. Gosh, I just don't have all the technical information, but I study so much in the markets and in the news, and I don't remember all of the technical names for all the regulations and whatnot. But here's what's happening, in my opinion. All right, when the government got worried about banks being under stress during the last crisis, they removed the reserve requirements, and I think this is part of the Basel Accords, but don't hold me to that asset as well. And they removed that requirement down to zero so that the banks could do anything they wanted to do, and they would not be labeled as insolvent. Well, recently that they were notified that moratorium on reserves, in other words, the zero reserve requirement, is being removed on March 31, bringing back the prior reserve requirements. All right, what does a bank do when you tell it you don't need reserves anymore? At the same time the stock market is going up, at the same time inflation is raging, and at the same time that the price of bonds are low and easily shorted because going lower. Well, what you do is you overextend yourself. So people were looking for Fed Chairman Powell to give them a free pass and to continue the zero reserve requirements, and he did not do that in his speech. What's been happening in the stock market is related to what's happening in the precious metals market. So these banks are deleveraging. They are taking all the excess out of their portfolios. They're bringing it back down because you can't do that in one day. On March 31st, if they restore those reserve requirements, then the banks are going to be, in deep trouble. So I think they're moving towards deleveraging. They've been selling their bonds, right, and their stocks to the extent that they have stocks or derivatives based on stocks or bonds. So they've been selling their bonds. What happens when they sell their bonds? Rates start to go up. What happens when rates start to go up? Well, people start to get really worried about rates going up. They've been very low for a long time, and that's damaging to the economy. Rates go up, dollar gets more attractive, dollar goes up. All right? And consequently, stock market goes down. They're already selling their bonds. They're already selling their momentum stocks. Rates go higher, dollar goes higher, that perpetuates the fall. That's why buy the dip was not working earlier in the week. They're just pulling their money out of the market. When the dollar goes up and when rates go up, silver and gold fall. Okay, gold falls because rates are an alternative to a zero return investment for gold, and silver falls because commodities are priced in dollars. When dollars get more expensive, then commodities that are priced in US dollars tend to fall because people don't want to pay more all around the world. All right, so we had the perfect storm for stock market down, gold down, silver down, and interest rates up. All right, so I believe, and there has been a liquidation of paper derivative stocks and bonds. So what I believe is watch the reserve requirement rule. Watch when Chairman Powell continues the free pass on reserves for the bullion banks. He'll do it. I don't know if he should have done it last week, but he didn't. He should do it next week as soon as possible if we want the stock market to keep going back up. As soon as he, and I believe it'll come out of the Federal Reserve, I think it will. If you know differently, please post below. As soon as he says, free pass for the banks, zero requirements for the next year, or whatever he might say, that's it. That's the bottom. I believe the stock market will continue its leg up. I believe that that will bring rates back down. I believe that that will bring the dollar back down. I believe that that will bring silver spot price back up. And just watch for that. If they allow the banks to get hit with these reserve requirements, then just look for the end of the world, because everything is going to fall apart, and you're going to see another crash, in the repo market, and you're going to see everything fall apart. So it's not a terrible time to be out of the stock market, but it's a good time to be in precious metals, because they can't knock down the physical. If you've got the physical, notice that demand is super strong. If you follow Kitco, notice that the premiums on 1,000-ounce bars are the highest they've been in like forever. Notice that you still can't buy silver very cheap. I did see a couple of generic pieces crack under $30. So in my mind, the real spot price, physical spot price is $30. I'm sorry, the paper is down here. If you're trading paper or buying paper silver, then you have to be ready for this kind of thing to happen. But that's the formula that I look for to bring some demand back to the spot price. As well as the stock market. It's been a tough week. I mean, if you're invested in stocks, you've been liquidating, as your value has been going down, you've probably been liquidating anything you have, including paper silver, if you had that, if you weren't properly hedged. I do hedge in the stock market, and I do hedge in paper silver, but my problem is I always cover too soon. So that's the challenge, is knowing when to take off your hedge. Because if you take it off too soon and then stuff keeps going down, well, now you're just floating like a cork in the ocean, and all you can do is buy more, which is what I do, because I don't keep all my money in the market. I keep a sizable portion in cash. So that's the market. Hopefully that wasn't too crazy of a theory for you all. But, in the end, the accountants rule the world, all right? The little rules that the little bean counters set out there that change dramatically, change the way that institutions react, and a little change like this reserve requirement was a huge, huge thing. And I saw this before in one of the previous stock market crashes. Hold on, I'll be right back. I'm back. So I was saying, when we had the stock market crash that was related to real estate and mortgage-backed securities and, the Big Short and all that stuff, what really caused that? That was the accountants changing the rules on mark-to-market on real estate, for real estate to mark-to-market rules. It started a wave of selling, and it didn't stop until the day that they removed the mark-to-market rules. Little things make a big difference. You can track the recovery from the stock market housing related crash to the day. The bottom of that was when they removed those mark-to-market rules for real estate investment. So anyway, that's all I have. I hope you're having a great week. I hope you'll go shopping if you need silver. Wise people say average in, so you don't pay too much. You don't always pay too little, but you just keep buying. If you were looking for a quick buck in silver, well, welcome to Heartache City. Quick bucks are hard to find in silver, but slow and steady wins the race. And you know, we got good things ahead. You know, don't sell out just because the stock market crashed, right? Just because the bond market. I mean, all those things that are happening are reasons to buy more silver and gold, not less. Okay, guys, hope you're well. Please post your comments below, and I'll see you next week. Bye.